You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 8th day of January, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is private, members only, and those taking the 1-week free trial. That's our live training room. 2 hours every trading day from 9:30 a.m. to 11:30 a.m. Eastern. When you take the free trial, if you haven't taken it yet, and when Michael comes on, he'll walk you through step by step how to take the trial. We'll get you indicators indicating today. Your trial will start tomorrow, which is a Thursday, and most of the markets are closed tomorrow. But don't worry, you'll still get 5 consecutive trading days where you'll have access not only to the indicators and the live training room, but also everything else. We treat you just like a member for 5 consecutive trading days. Even when there's a holiday or a weekend, don't worry, you'll get 5 consecutive trading days. When the live training room ends, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Afternoon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So all you have to do at 12 noon Eastern is click the link in the email, and it will log you right into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. There will be days that you're out of the office, away from the desktop, but still want to join live. And of course, days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but just pick some at random. And again, that will show you from whence we came to where we are now. youtube.com/CFRN. This is our afternoon schedule each day. We start with our devotional, word of prayer, some news, recap of the logic alerts, the concierge trade alerts, and then about 50 minutes into the broadcast, Michael will join us, give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for about a half hour. And then we'll wrap things up with our good word for the day. So let's get to the devotional. We started a new topic yesterday, 7 ways to renew your mind. So this is day 2 of 7. And today's scripture is Joshua 1, verses 1 through 9. And I'm going to share it from the Message translation. After the death of Moses, the servant of God, God spoke to Joshua, Moses' assistant. Moses, my servant, is dead. Get going. Cross this Jordan River, you and all the people. Cross to the country I'm giving to the people of Israel. I'm giving you every square inch of the land you set your foot on, just as I promised Moses. From the wilderness and this Lebanon east to the great river, the Euphrates River, all the Hittite country, and then west to the great sea. It's all yours. All your life, no one will be able to hold out against you. In the same way I was with Moses, I will be with you. I won't give up on you. I won't leave you. Strength, courage. You are going to lead this people to inherit the land that I promised to give their ancestors. Give it everything you have, heart and soul. Make sure you carry out the revelation that Moses commanded you, every bit of it. Don't get off track, either left or right, so as to make sure you get to where you're going. And don't for a minute let this book of the Revelation be out of mind. Ponder and meditate on it day and night, making sure you practice everything written in it. Then you'll get where you're going. Then you'll succeed. Haven't I commanded you? Strength, courage. Don't be timid. Don't get discouraged. God, your God, is with you every step you take. Joshua 1, verses 1 through 9. Yesterday we talked about the first step, 7 ways to renew your mind. It's a 7-day devotional. So this is day 2, the second step. Stop believing that you can't control your thoughts. The second lie that must be repented of is the belief that you cannot control your thoughts, but rather they control you. This excuse is not scriptural. When we look at the Bible, we see that it commands us to think about these things in Philippians 4:8, and to meditate on it day and night, Joshua 1:8, meaning that we can choose the thoughts we entertain. We must understand that the mind is a servant, either to our spirit or to our flesh. When our inner man is weak, the mind runs errands for the flesh by thinking negative thoughts. But when we constantly build our spirit by communion with the Holy Spirit, our mind comes under the influence of the Word of God and the Holy Spirit who lives in us. It is then that we are left with the choice to think godly things or let the mind go with the flow of life. For example, every country has border patrols to stop people from entering who are not supposed to enter. And America is about to have that again in just a few days. We've been without it for 4 years. It is for the protection and safety of the country. In the same way, It's important that you set up border control in your mind to stop all the thoughts of doubt, fear, and negativity from entering and living in your mind. They only bring harm to your life. Join me in a word of prayer. Heavenly Father, thank you for your promise to be with us wherever we go. Strengthen us to be bold, courageous, trusting in your word, following your commands. Remind us that you are our source of strength and victory in every challenge that we face. Help us to meditate on your word day and night so that we may walk in wisdom and obedience. Thank you for being our faithful guide and ever-present help. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Wednesday. Let's take a look at the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 101 points. NASDAQ is down 74. S&P 500 down 12. And the Russell 2000 down 17. In the commodity basket, crude oil down 82 cents, trading 73.43 last. That's a drop of almost 1.25%, or $850 per contract traded. Gold is up 20 bucks today, trading 26.8560 last. Silver's up 20 cents, trading 30.89 last. In the Asian markets at the close, the Nikkei dropped 102 points. The Shanghai was basically unchanged on the session. The Hang Seng fell 167 points. That's almost 1%. And in the European markets at the close, FTSE up 5, the DAX down 10, the CAC down 36. So, we had a red day in Asia. It was a mixed day for the UK. And it is a red radio Wednesday here in the US of A. With that, we'll take a look at some news. A 7.1 magnitude earthquake struck the Shagatsi region of Tibet yesterday at 9:05 a.m. local time, causing widespread damage and claiming at least 126 lives. The epicenter was located in the high-altitude Chinese county of Dingri, about 47 miles northeast of Mount Everest, at a depth of 6.2 miles. The tremors were felt across Nepal, India, and Bhutan. More than 1,000 homes are damaged, and rescue teams have been deployed to search for survivors. However, efforts are being hampered by freezing conditions, with temperatures dropping as low as minus 5 degrees Fahrenheit. Now, this city, Shagatsi, it's the second largest city in Tibet, and the traditional seat of the Panchen Lama, the second most significant figure after the Dalai Lama in Tibetan Buddhism. The region's location along the Indian-Eurasian tectonic plate boundary makes it prone to seismic activity. A 2015 earthquake in Nepal resulted in nearly 9,000 deaths. The U.S. government yesterday officially accused a Sudanese paramilitary group and its proxies of committing genocide in a 20-month-long brutal civil war against the North African country's military. The declaration marks the most decisive stance the U.S. has taken in the war between the forces of two formerly allied generals, Rapid Support Forces, and the Sudanese Army. The conflict has killed an estimated 150,000 people and displaced more than 11 million people. That's about 1/5 of the country's population. The U.S. has declared genocide only 6 other times since the end of the Cold War in 1989. Secretary of State Anthony Blinken said yesterday the RSF, a group with roots in the infamous Janjaweed militias, committed systematic executions of men and boys and sexual violence against women and girls based on ethnicity. In response, the U.S. Treasury Department has imposed sanctions on Dagalo and 7 United Arab Emirates, 7 companies in the United Arab Emirates who actually support the militia. And the big news that came out yesterday, Meta is doing an about-face. CEO Mark Zuckerberg announced broad changes to the social media company's content moderation policies, including ending its U.S. fact-checking program and removing restrictions on sensitive political content on its platforms, including Facebook and Instagram. The CEO claimed that Meta's adoption of more stringent content moderation after the 2016 election led to the mistaken censorship of millions of users. In place of fact checkers, the company will deploy community notes in the U.S. similar to those on X, formerly known as Twitter, where users provide context to post. It will still use its violation scanner to address high-severity issues like terrorism and child exploitation. The company will also move its safety and trust teams from California to Texas. This is a complete 180. Zuckerberg said he was moving the moderators from California to Texas because the people in California, that's a lot of people, are so indoctrinated to the left that he just doesn't think they can do the job. It's quite a change from California to Texas. We wish them well. Zuckerberg also signaled he would support the incoming Trump administration's effort to combat foreign censorship. The changes follow Meta's appointment last week of Republican Joel Kaplan as its foreign policy chief, and it gave a $1 million donation to Trump's inaugural fund in December, and they gave Dana White a seat on the board. That really is a 180-degree turn. So I guess the question now is, will they follow through on it? It seems like whoever's in power, they tend to lean in that direction. Hopefully, Mark really has had a wake-up call and is truly going to honor free speech. Let's look at the markets. The next administration's tariff plans could quickly become a focus of lawsuits that are sure to mean more uncertainty for businesses trying to weigh the effects of a second round of Trump trade policies in the coming months. The legal questions are expected to mount quickly if the president-elect and his team try to move quickly and dramatically on tariffs in the early days of his administration. New signals sent this week suggest that is their intention. During a news conference yesterday, Trump reiterated his desire for tariffs, including substantial duties on Canada and Mexico, among other countries. The legal challenges Trump may face if he follows through could be most acute if he tries to use a 1977 law called the International Emergency Economic Powers Act, perhaps the most muscular and rapid route to new tariffs, to declare an economic emergency and act quickly. It's a route that is under active consideration among Trump's aides, according to a report from our friends at CNN. Trump spoke for about an hour yesterday. He fielded every question from the reporters that were in attendance. He didn't use a teleprompter. He probably spent more time talking and answering questions than our current president has in the last 4 years. I mean, whether you're on the left side of the aisle or the right side of the aisle, it's got to be encouraging to know that we actually have a president once again, a true commander-in-chief. We're not all going to like everything he does. You can't make everybody happy, but you can make America great again. From Bloomberg, the 20-year Treasury bond offered a grim warning as a sell-off fueled by inflationary angst gripped global debt markets. 5% yields are already here. The 20-year yield, a laggard on the U.S. government debt curve since its reintroduction in 2020, topped 5% today for the first time since 2023. The move fueled in part by concern that President-elect Donald Trump's policies will rekindle price pressures and lead to wider deficits, indicates what's potentially next in the $28 trillion Treasury market. For Wall Street banks hoping to play a role in one of Hong Kong's biggest listings in years, the U.S. Defense Department's decision this week cut my article off. I guess we can just move on to the next one. Okay, fair enough. Quantum stocks. The shares of LongQ Incorporated and other companies linked to quantum computing tumbled today after NVIDIA Corp. Chief Executive Officer said that very useful quantum computers are likely decades away. That's a different tune than what we heard a week or so ago. If you kind of said 15 years for very useful quantum computers, that would probably be on the early side. If you said 30 years, then it's probably on the late side. If you pick 20, I think a whole bunch of us would believe it. That came from one of NVIDIA's analysts. Quantum computing shares had gained more than 1,800% over the past 12 months to 1749 through yesterday's close. Rigetti rose more than 1,500% to 1839 over the same span, while D-Wave advanced nearly 1,000% to $9.55, and Long Q more than 300% to $49.59. The analyst's comments also hit China-listed quantum computing companies, with shares in Quantum C-Tech, Ace-Link Technologies, all sharply down today. Shares in Alphabet, which had rallied 12% in December for their best month since May of 2023, slipped about 1%. So, quantum computing, it's here, but it looks like it'll be a while before you and I get our hands on it. Until we read the news tomorrow, when they'll give us a whole different story. The last from Reuters, number of Americans filing new applications for unemployment benefits fell to an 11-month low last week, pointing to a stable labor market, though a slowdown in hiring has led some laid-off workers to experience long bouts of joblessness. Signs of a steadily cooling labor market could allow the Federal Reserve to keep interest rates unchanged in January against the backdrop of still high inflation. The U.S. Central Bank last month projected a shallower path of rate cuts this year than had been forecast just back in September, when it launched its policy easing cycle. Fed Governor Christopher Waller said today that he expected further rate cuts, adding that the pace of the reductions will depend on how much progress we make on inflation while keeping the labor market from weakening. So there you have it. That's the deal, globally and on Wall Street. So let's bring it home. Logic 247. It's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver, bonds. Over the last 336 weeks, we've issued over 18,800 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So far this week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 31 alerts. At the time Valerie did the recap this morning at 8 a.m. Eastern, we were still waiting on the outcome of 8. That gave us 23 actionable alerts, of which 2 or 9% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. So, middle of the week, 9%, it's pretty good. Remember, the average over the last 336 weeks, 18,800 plus alerts, has been 20% or less. Last week we ended up with 21%, I think it was. So perhaps we'll offset that this week. Now, each logic alert has an entry price, an initial target designed to help you get your goal for the day, then additional targets, and a final trade to target. Of course, you can trade them, But that's not the real purpose of the logic alerts. The purpose of the logic alerts are to help you learn how to read a chart. See, the alerts, which come out around the clock, because futures trade around the clock and we got traders around the globe. The purpose of the alerts is to help you learn to read a chart, to understand what it's telling you, whether you're looking at a daily, a 30-minute, a 1-minute, a tick chart, a range chart, those candles or bars, whatever you're using. The first time you look at a chart, probably just kind of looks like chaos. But there's a rhyme and there's a reason. And if you use the logic alerts properly, whether you trade them or not, you'll learn to spot areas where there's potential resistance, potential support, and you'll learn how to find the windows of opportunity in between the two. You want to get to the point where you can look at any chart of any market in any time frame, and with the help of our humble indicators, instinctively know what the next high probability move is. Now, you're never going to be 100%. What the last 336 weeks have taught us is that about 20% of the time the market will do something other than what appears to be the next high probability move. The reason for that, there are so many participants, institutional and just regular folks like us. But it's the institutional traders. They trade in massive size. And if maybe a trader has just put on a big buy order and everybody around the world can see it, it's in the DOM, and then they have an important phone call they have to take, so they pull that order. All the other market participants are scratching their head. Wow, why did that huge order, why did it get pulled? Oh, must be some bad news. So if you're striving for 100% in anything, with any methodology, with any strategy, that's a brutal path to take. It not only doesn't exist, it can't exist, because man does not have the ability to change the past or predict the future. However, once you understand how price flows, and it flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again. Once you understand that rhythm, then the clouds part and you're able to see more clearly. And you'll get to that point if you show up and if you do the work where you are able to read the chart and understand what is most likely to happen. Just stop trying for that 100%, because it's not going to happen. Okay. Now, our original alert service, the concierge trade alerts, they're a little bit different. Number one, they don't come out around the clock. They're posted as a static report shortly before the Globex Open most days. Today's the Wednesday session, but it started last night at 6 p.m. Eastern. So I'm not able to get the CTAs out every day prior to the Open. But I think I've got a pretty good string of 3 weeks. I think only one day I wasn't able. But I do my best to communicate with you in the discussion group on the days when the alerts will come out 5 minutes before the open, so you can be prepared to get your goal for the day at the open and then go on about your business. And on the days when I can't, and I know I'm not going to be able to get them out before the open, I will message that as well in the discussion group, and then I will get them out as soon after the open as I can. So all of our members and trial members had all of these targets last night, 5 minutes before the market opened. Bonds, silver, gold, the NQ, crude oil, the Russell, the Dow, and the S&P 500 E-mini. So let's go take a look at the charts. We'll start with the daily chart, as we do every day. Now, the green line, it's called the BBC, stands for bull bear cross. When price crosses above the green line, we expect higher prices. When price crosses below the green line, we expect lower prices. So we're bullish here, bearish here. Now the markets are fractal in nature, so is the BBC. We put it on a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart. It's going to behave the same no matter what market, whether it's futures or stocks or crypto or Forex or ETFs. But it's always relative to whatever time frame you're looking at. In other words, don't expect daily results from a 1-minute chart or vice versa. Now the pullback to the BBC holds more often than it doesn't, but eventually it will trade through. Then you rely on market structure to determine where the market will most likely find support, as you see here. And then you get a leg, you get a retracement. There we held 5 consecutive trading days. The BBC served as support as we went on to put in our all-time historic high. Then blue and climbing turned to red and falling, and we traded way down. This is one day. Now, that was Fed day. We hit the 0 line on the fib extensions, and we bounced up to the 38% fib extension, and we had a retracement. Then we continued higher. We spiked the BBC, but that was short-lived. Down we came to this key area that I shared in a members-only workshop several weeks ago. Once, twice. It has held as good support. It's right where that step line crosses red and falling, and red and falling becomes blue and climbing. That's an important price, important area. Hit it to the tick here. Here, buyers were simply coming in early ahead of this previous low. So support always sends the market up to resistance. Remember, the pullback holds more often than not, even when you spike it. And down we come. Yesterday, we closed right at the 24% fib retracement. Today, we found support. Now remember, yesterday we talked about it would be important at the close of the session. During the live broadcast yesterday, price was above the step line and red and falling. And I said those can both act as good support, and just below them are the 24% fib retracement. And so that is where the market, we spiked that 24% fib yesterday, but we closed right at it. See the horizontal line on my cursor? Then we opened last night. The market attempted to go higher. Now it's dropped back to that zero line. Okay, we found support there, here and here and here and here, and now again here. If we trade below that zero line, then there's a huge gap here down to this low right here, and that low is 58.74.75. So we hit that zero line and we bounced, just as we bounced here and here and here. See, this is all market structure. This is all part of learning how to read the chart, how to understand what the next high probability move is. Now, do we know for certain that this is going to hold as support? Is this going to be the low of the day? No, we don't know. Just as yesterday, we didn't know if price would be able to trade through support times 2, but it did. In fact, it traded all the way down to here. But by the close, 5 p.m. Eastern for futures, we were right on the 24% fib. So now we got resistance overhead at the 24% fib and red and falling. Yesterday they were potential support. Today they're potential resistance. Support here and then support here. I encourage you to spend a couple of minutes each day with the daily chart of whatever you trade. Whether it's futures, stocks, crypto, Forex, ETFs, doesn't matter. Institutional traders, the ones with massive account size who trade in huge size, they're the ones that actually move price. They look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So if they're the ones that move price, doesn't it just seem logical that getting a free look over their shoulder to see what they're up to before you start trading might help you? Not only are you getting a free look at what the institutional traders are doing, but you're able to identify where major areas of support are. Just like yesterday when we talked about the 24 being potential support, and it was, you couldn't see that on your 30-minute chart, 5-minute chart, tick chart, or range chart. So there's no psychic ability involved. It's just applying logic. What's the next logical thing to happen? Well, the next logical thing to happen here is for price to attempt to break this support area. Now, whether it does or not, I don't know. I don't have crystal balls. But if we do break it and take out that low, I can see clearly that we've got, in a big picture, no obvious support until this low. So try it 2 minutes a day with whatever you trade before you start trading. See if it doesn't make a difference over time. All right. Here's the ES 30-minute chart. Now, all alerts are created on the 30-minute chart. Logic alerts, concierge trade alerts. Nothing magical about 30 minutes. Just the time frame I chose years ago. And they say if it's not broke, leave it alone. So that's what I've done. Now, the zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. The vertical line separates today, Wednesday, from Tuesday. Back here is Monday. Now, as price dropped on Monday, it found support at the weekly zone. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance until proven otherwise. Okay. Now, yesterday, only three things happen at a zone. Consolidation is about 70% of the time. It can look like this. It can look like this. 20% of the time, rejection. 10% of the time, the slice. When a 30-minute candle slices through a zone like it's not even there, price typically will retrace back to the zone it sliced through and then continue in the direction of the slice. But there was such a lack of buying pressure yesterday, we didn't make it back to the zone. We just continued dropping to the zone below. And then as we headed into the close, we traded through and we hit this zone, which is 59.34/35, and the low is exactly 59.35. And again, these are the zones that were published for our members and trial members Monday morning, 6:15 a.m. Eastern. Here was the open last night. We're below the BBC, so we naturally think lower prices, but we see that we have red and falling directly below price. When red and falling gets directly below price, then it can actually become support, because it's very possible that it's on its way to becoming blue and climbing. One is bearish, the other bullish. So price traveled up to the weekly trading zone, consolidated for hours, hit the BBC, got a little bit of a reaction to the downside, then back to the BBC and the zone. We did actually trade a little bit above the zone, and then things changed. And we dropped right down to the short target and the zone below. Now this candle right here, it opened at 59.60 half. 59.60, let's just call it 59.60. And it dropped from 59.60 to 59.36. That's 24 points in that one candle. You only need 2 points to get your goal for the day. When the market finds support, it will go look for resistance. Remember, the pullback holds more often than not. When the market finds resistance, it will go look for support. When price drops to a zone, we expect it to hold as support until proven otherwise. So support sent us back to resistance again. The pullback held, even though we spiked it. You got to look, as long as the candle is touching the BBC, and that's a hold. And then we had this candle right here, and we traveled right through. We sliced right through the zone. And now what has price done? It has retraced back to the zone we sliced through. So based on the last 15 years of the zones, we would expect another leg to the downside. Slice, retrace to the zone you slice through, then a continuation in the direction of the slice. All right, Michael's here, so we'll pick up with the Dow. Uh, he's going to give us a recap of what happened in the live training room. Then we'll do a few minutes of live trading on the TradingView platform. And then I'll come back, we'll finish the recap of the alerts, and we'll close out with our good word for the day.
Here we go. Should be looking at my charts. Yep. Ready to go.
Okay, looks good.
All right. Bring this up. Here we are. All right. Good afternoon, everyone. Happy Wednesday. Today is Wednesday, the 8th day of January, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right there. There is no credit card required for the trial. Just click that purple button. It's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. Down here at the bottom, give us your TradingView login ID. If you have NinjaTrader and you want to use Ninja charts, give us your Ninja ID. Note that we don't have all the indicators that we use on the Ninja charts, but you can give us your NinjaTrader ID. If you just trade with NinjaTrader, then you don't need to do that, right? But we do need your TradingView ID. If you want to have the charts that we're going to be using, get TradingView. If you haven't gotten TradingView yet, you can go here to mytradingiq.com, click on trading platforms, and it's right here. Watch that video. Click this link right down here, tradingview.com, and that will bring you to, yeah, that will bring you to, well, if you click that, it's going to be to this page right here. Okay, click on monthly. It's $14.95 a month. It's actually free for the first month. So you get the data, you get the charts for free for a month. You got to pay for data, real-time data is $7 a month, but you got to do all that stuff, okay, to get TradingView. Now, once you have TradingView, well then, you'll then be in a position to profit from everything that we are able to show you in here. Like the ES just had a trade from right in here a minute ago. The Russell just had a trade from right here a minute ago. The NQ's got a trade from right here right now. Okay, so let me just go through. Let me just go through the spreadsheet here really quick. All right, for those of you guys who, well, for anybody that's looking at the spreadsheet, actually, I'm long on that NQ. I'm going to bump my stop to break even on that, and here it is. I'm in at 49.50, so I'm going to bump it all the way up to 54.50. And now I'm going to bump it from 49.50 all the way up to 59.50. That's 40 ticks, 44, and I'm out with 44 ticks on that. Remember, I had a 75 tick target on that because it's a 50 range. But anyway, the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. This is the ES trade here too. I'm in. Hang on, I got to bump my stop to break even on that. Lock in 4. Actually, that's not 4. Lock in 8. There. Get rid of that. So we have 8 ticks locked in on the ES trade. I think we're going to get a break. Okay, we're going to get out right there with 8 ticks. That was a chunk of money right there that you just saw me take. Those of you guys that don't matter, that was 100 ticks on the ES with 10 contracts. It's $1,000. With one contract, it's $100. Not 100 ticks. It was $100 with one contract. It was 8 ticks, which is $100 with one contract. It's $1,000 with 10 contracts. And 40 ticks on the NQ. 40 ticks on the NQ is $200 with one contract, or $2,000 with 10 contracts. So that was $3,000 right there. Those of you guys who don't know. Anyway, the spreadsheet today was almost our best day of the year. I was one tick away from it in the room this morning. Now, clearly you just saw that we ended up better than that. But well, I'll just go with what we did in the morning session. On the NQ in the morning session, well, to get the goal for the day anyway, it took 7 minutes and 2 trades to get to $3,400 this morning. We took a total of 19 trades. Now we ended up with 335 ticks on the NQ, 12 ticks on the Russell, 34 ticks on gold, and 54 ticks on the ES. Put us at a total of 2750 on the morning session. Okay. On the month now, we're at $9,727 over 5 business days, averaging $1,945 per contract per 2-hour business day. On the year now, we're at the same numbers, all right? And getting the goal for the day right now, we have now taken 21 minutes to get the goal for the day in the 5 days that we've traded. So if you were to do this times 3, it's about $3,600, $3,755. About $3,755 per hour is what we're averaging right now on the year. Okay, what did we end with last year? 3,405. So right now, starting out this year, we're averaging 3,755 right now, but we're starting out with 10 contracts. Last year we started with 1 and worked our way up. Right now we're starting out with 10. I'm going to stick with 10 all year. I think I like it. It's pretty good. It's consistent, and we've done the 24/20 blueprint and all that stuff for you, so you all understand that. Now, that is where we stand on the day, the month, and the year. Okay. Now the trades that we took. Let's get into here. I just took this one right here, and I got 40 ticks on that one. All right. I took this one on the ES, and I got 8 ticks on that one. There was one over here on the Russell I didn't take. That was it. But let's get into the ones that we did actually do. Okay. Let me see questions in here. I don't see any questions yet, so I'm going to jump right into the trades that we took. All right. See, I put the vertical lines on trades that I missed this morning, and it looks like I missed a bunch of them. Well, these we didn't start until right here, so I missed that one. But on gold, we got our first trade on gold was right here. We got 2 ticks on that. And then the next trade was right here. We got 17 ticks on that. That put us at plus 19, it looks like, or 16 ticks. It put us at plus 18. Then the next trade we took was over here. We got 11 ticks. That put us at plus 29. And then I had a break even there. And there was one more trade in here somewhere where I got 5 ticks toward the end of the session. I think it was something that I didn't mark. I don't know. Maybe it was one that I did mark. It might have been right in here. But I got 5 ticks on this one. Right here. Okay. That got us to 34 on the gold. And all these other ones that I didn't mark, you can see you would have been, in this case, buying the open. They're marked on the bar that you should have been entering. So buying the open, selling the open. This one here might have gotten you break even. Both of these would have gotten you the goal for the day. Buying the open, that would have eventually gotten you the goal for the day. It wouldn't stop you out. It didn't pull back deep enough to stop you out. Selling the open, that's a goal for the day. Selling the open, break even. Buying the open, that one, I got profit on it right here. I don't know how that worked out. I think, all right, the blue arrow is not that one. The blue arrow is the one that I sold right there. And so our first trade at that point, what are we on? We're on gold. There's a whole bunch of trades I didn't keep track of in here. So we got a lot more than 34 ticks, it looks like. I don't know. This is all right. Okay, this is all right. I did do all that. But I was just going through some of these other trades that did trigger that I didn't get, just so you could see that almost every one of these trades was enough to get the goal for the day. Almost every one of those trades was enough to get the goal for the day. Even if you only got half of the goal for the day on each one, you know, there's enough there to just be profitable day in and day out. There's one right here that just happened a few minutes ago. See, 11:43, a little more than a few minutes ago. Right, there was a beautiful trade right there. Another one right there, caught it right at the top. Right here, the open of that bar. Right here, the open of that bar would have been the trade. It pulled back a little bit. Right here, the open of this bar would have been the short right there. Caught it at the top. The open of this bar right here, it pulled back 9 ticks, and then it went down. So your stop is 15 ticks on this, right? And right here, you can sell it right here on gold. It was the open of this bar right here, okay? Where this went into the overbought, the open of that bar. So here it is. And we'll let that trade run while we go to the next market. Okay, we ended up with plus on gold, we ended up with plus 34 ticks. Okay, now we'll go to the Russell. And let's see, on the Russell. Here it was. We didn't trade a bunch on the Russell, but there was a bunch to trade. Our first trade on the Russell was right here. We got 22 ticks on that first trade right there. Then we stopped out on this one. That put us, we stop out on the Russell was 25 ticks, so it put us at -3. Then right here we picked up 10 ticks to get us to +7. And then it doesn't look like I marked the very last trade. There was one other trade where we got 5 ticks. I think this was the 5-tick trade, and there was one other trade where we got the 10 ticks. But anyway, we ended up with a +12 on the Russell. Okay, +12 on the Russell. And during the break, it had one trade right here. You would have shorted the open of that bar. And one right here, you would have shorted the open of this bar. Both winning trades. You would have bought the open of this bar, enough to get your stop to break even or take some profit. You would have bought the open of this bar, and enough to get a lot of profit. Bought the open of this bar. Great trade. And right now, it doesn't have anything. That was the Russell today. We ended up with +12 on the Russell. This gold doesn't look like it's going to work out. Is my stop in the right place? It's not. My stop should be at 4. I have a 15-tick stop on the gold. Okay. All right. So now the ES. Let's look at the ES here now. So there's a lot of movement here on the ES. Okay, and I'll drag this all the way over here. Keep going. Look at all these trades that triggered in there. Now, the ones that I took, not near as many as the triggered that we just did stop out on the gold. Okay. The first trade we took on the ES was right here. We ended up with a break even. Okay, the next trade we took was a break even, and the one after that we got +8. And then we had all those trades that triggered that I didn't get, and right here we got another +8 to get us to 16. And then here we got a +12 to get us up to 28. And then a 6 to get us to 34. A break even, and a 20 right here to get us to 54. And then a couple more break evens in there. And I don't remember what I drew that for this morning. I don't remember, but I think it was I was illustrating the 50% retracement right here. That's what it was, 50% retracement. And this should have given us a push down this steep right here, but it didn't. It changed directions on us. So in the change, if you were in there in the morning session, the change of directions happened right here. And then the leg up ended up being this move right here, right? Well, this whole move, I guess, was the leg up. Where it didn't end up, it's not gonna let me stretch that out, is it? No, it's not. Okay, so I'll do it this way. So when it failed to give us this right here, I got to break even on that. But when it failed to continue with that, gave you this. This is a 50% retracement of that, right? So from here, you should see the same thing again. You should see that same leg happen again from right here, which it did do all the way over to here. Now the time element on this, retracement from here to here. This was part of the lesson plan yesterday. But the time element on the retracement was from here to here. Okay, so if you take that and you add it over to here, and the price element on the retracement was from here to here. So you add that to the end of that. By the end of this time, you should have reached this level in price. Now, obviously, it did it a lot sooner, and it got it way over here. Okay. So it was a good turnaround that it did right there, and it really didn't give you any trade setups to take in that opportunity there. But there was one right here. You could have shorted the open of that bar, which would have given you the goal for the day. You could have bought the open of that bar, which may have stopped you out. The 10-tick stop, it may have stopped you out. Depends on your feel. But then shorted the open of that bar, gotten it back, and shorted the open of that bar. Somewhere near, it was a buy right there. Buy the open, short the open. Anyway, on the ES, we ended up with plus 54 ticks this morning. Plus 54 ticks. Okay. And you can see there were a bunch of trades in here. If you just look at where the blue comes out by itself, there weren't that many trades, I guess. There was one here, one here, one there, one there, one there, one there, one there, 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 there. I guess there were a bunch. There and there. And there and there. There, there. there, and there. And there's one right here, buying the open of this bar, right here. Still working right now, okay? But that was the yes this morning. Right, we ended up with plus 54 ticks on it. Now the NQ has been really wild. That's why I went to the 50 range bar. And we ended up on the NQ with 335 ticks. So I didn't count a bunch of trades that I took during the break. But 335 ticks. Somewhere in here I need to stop out. But over here, this was our first trade on the NQ. Now we picked up 68 ticks on the first trade. Then the second trade got us to 96. Then we had a break even. And 96, we had a 4-tick trade that got us to 100. Then another break even. You see, these are 50 tick range bars. So from here down to here is like 200 ticks. Think about that. 200 ticks. 200 times 5. That's $1,000. Put 10 contracts on. That's 10 grand. If I wrote it all the way down. But I didn't. But right here on this one, I did get a chunk out of that, right? I think we went from 100 to 140. So that was a 40-tick trade right there. And then we went from 140 to 215. So this was a full 75-tick trade right there. 140 to 215. Then went from 215 to 231. From 231 to 271. I think that was 231 to 271. From 271 to 307. And 307 to 347. And 347 to 395, and then I stopped out there on that last one. And that one I shouldn't have stopped out on. I should have had my stop at break even. But I stopped out there and went from 395 down to 335, and I was 1 tick away from, well, 2 ticks on the NQ from getting a new all-time high. There's 750 and 750. 750 was the all-time high. We're 2 ticks away on the NQ, 1 tick away on the ES, 1 tick away on gold, 2 ticks away on the Russell, 2 ticks away on the NQ. And I highlighted this right here. This I didn't take during the room, but this happened right after I shut the room down. And I did get it right there. And obviously you saw I got another one a few minutes ago. So it was a busy morning. You know, using this trade setup, there's just a ton of trades, literally a ton of trades. You just have to stick with it. I know you might get down, you might stop out a couple times, but you have an edge and you have to keep executing your edge. Okay, there was one of our guys who's been averaging $1,100 a day per contract, and I guess with 1 contract or 3 contracts, something like that, but he's been averaging $1,100 a day, and he had a down day, and he was like, what do I do when I have a down day like that? I mean, I keep trading. You know, you keep trading. You know, it doesn't happen all that much that I get way down, but sometimes I do, and I just keep trading and I make it back. Right? If you just look at this, just looking at this right here, you're just looking for when the blue leads the way out. You just look at the shorts. 1, 2, 3, 4. 4 of those shorts. This one right here, these are 50 tick range bars. It ran at least 50 ticks. This one right here, and that ran hundreds of ticks. This one right here, that would have stopped you out. You would have lost 60 ticks on that. This one right here, easy. 75 ticks anyway. So you just have to keep trading. And if you look at the longs, just look at the longs in the same time period. 1, 2, 3, 4, 5 longs. Okay, and every one of those was a win. This one right here, you would have gone long right on the open of this bar, you would have gone long. Now it pulled back pretty deep, but it ended up going up. This one right here, you would have gone long on this bar. That had a pretty deep pullback, but it ended up running up. This one right here, we would have gone long at the open of this bar. Easy 75 ticks to 100. This one right here, you would have gone long at the open of that bar. Easy 50 to 100 ticks. It just works. Okay, if you're not doing this, I don't know why. I don't know why. It just doesn't make sense. You know, well, if you're really interested in making money, you know, there's a short here on the Russell right now. Pretty easy to see, right? There it is. Stop to break even. Stop to +5. That's $500 right, no, $250 right there. Sorry, $250 right there. Oops. I tried to drop it at 10. There, that's $500 right there. There it is. Was that 500? Was that 250? 10 times 5 times 10. So 50 times, yeah, that was 500. It's right there. The money is right there on the charts for you to make. It's yours to lose or yours to not take part in. You know, there's a long trade right here. That's already gone up a couple of ticks. It's pulled back now, but it's already gone up a couple of ticks. This is a short trade that I just took. Over here, we don't have anything. Over here, we don't have anything. But it doesn't get much easier than this, guys. Here's that long trade on the ES. Okay. Now my stop should be 10 ticks away, and it is 10 ticks away. And I probably should have had this at break even already for my entry, 47.75. Yeah, I definitely should have had my stop at break even. I was 6 ticks in profit, but I wasn't looking. So when I get a chance to bump to break even, I will. But you see, it is just there. Trade after trade after trade. If this bar closes down and the blue leads into the oversold, we're going to buy the Russell. Okay, I'll bring it over here and I'll show it to you. If it closes down and the blue leads into the oversold, we'll buy the Russell. All right, I'm not going to put my order on ahead of time because there are those conditions that have to happen. Right, those things have to happen for me to want to trade that. Now, I'm going to bump my stop to break even on the CS because I should have been out of break even already. All right, so slide that back over. And we didn't end up getting that trade on the Russell. But right now, we're waiting for these other markets. Does anybody have any questions about any of this stuff that I'm doing? Anybody? Any of these things that I'm going over right now? Because I would be happy to cover them with you right now. If you do. Right here on the ES, there's a sell right there. Okay, the blue led the way up into the overbought. So you sell right there, the open of that, 49.25. Here it is. 4 ticks in profit, stop goes to break even. I'll lock in 2. It's $25 with 10 contracts. That was $250 right there. $250. Over here, this is a trade right here on the gold. I missed it, but the entry was right there. And if I had 10 contracts on that, that's $10 a tick. If I got in at 73.2, it's already dropped down to 72.6. If I locked in 5 on that, if I locked in 5, that would have been $500 there. All right, well, I'll just keep trading. Nobody's asking any questions, so I'll just keep trading. I don't have the YouTube open, so if anybody's asking any questions in YouTube, I don't see them right now. I should probably open that up, though. Should probably take a look at that. There was one other thing that I had to check over here. Fresh on that. All right. I wanted to tell you guys, if you weren't there, Gary, yesterday I made the black line thicker and the slingshot TV trigger. Are you using the black line differently? I made the black line. I made the blue line thicker yesterday, not the black line. I'm not using it any differently in the trigger right here, Gary. No, the black, well, what do you mean using differently? Yeah, I'm using it for divergence in here. Okay, divergence is all I'm looking for. I'm looking for the black line to be separated from the blue line when the blue line's into the overbought or oversold. That's all you use the black line for. Okay. Like right in here, if we were to get down into the oversold here with the blue, then I'd be buying the open. Okay, over here, like I should have sold the open of that right there where the blue got up into the overbought. You can't even see the black line. That's good. You don't want to see the black line. Right here, I'll be buying that right now. I'm going to buy that right there. I'm trying to get filled at 71.8. I didn't get filled yet. All right, I just filled at 71.9. Okay, on the gold. I bought it right here, the open of that bar. It's as simple as that. You don't have to really think too much about it. I'm not in at the best spot, but I'm in okay. And after 5 ticks in profit, I'll bump the stop to break even. Okay, with 10 contracts on, this is $300 right here, right now. It goes up 2 more when it hits 4.4. My brain just didn't work there for a second. It was like a blank slate. I was trying to do the math, and it was like I hit clear on the calculator. It's got to go up 1 more tick, and then I'll hit the break-even button. Okay, well, the break-even button for me, break-even button for me is that. So now I have $500 locked in. Not locked in. I'm sorry, I have $500 profit. Now I have 100 locked in. Right, but right here is 500 profit. I could take right now if I wanted to. Okay, I think it's going to go up to there. I'm going to lock in 2. And I think it's going to go up to there. Now, up here, the prior swing high is at 3.4. And hey, look, right there. Coincidentally, it's right there. So if I get 2 right here, that's $200. Okay, and I'm okay with that. And I did. I got 2. But I am killing it right now. So you guys should be too. You're doing the same thing, right? You should be doing the same thing. The ES right here has a long. Why? Because the blue got down there in the oversold by itself. Where is it? Right here. It's $125 a tick for me right now. After it goes to 4, I'm going to bump the stop to break even. Stop to break even. I'll lock in 1 tick. That's $125 there. So in the last minute, I made $200 there and $125 there, just by bumping my stop to plus a couple of ticks on each one. And what should they do? Well, they should continue moving. But if you manage your risk appropriately, then it doesn't really matter what they do when you're out of the trade. Okay, you get into the trade at the right spot. Like in here, we got into the trade here, off by 2 ticks, right? The entry point should have been there at 0.7, we're in at 0.9, and it ran from 0.9 up to 0.5, so 6 ticks in profit. This one over here, we were in pretty close to the right spot. I think we're exactly the right spot. And that ran enough to get the stop to break even, plus a tick. So, and right now the market's pretty slow, so this is not that hard to do. Tomorrow, when we do the morning session tomorrow, only the metals and the energies are open. So I'm going to do metals and energies, and I'm thinking I'm going to do silver tomorrow on a 4 range, and maybe copper tomorrow on a 4 and 9 range, and gold and crude oil. I think those are the markets that I'm going to do tomorrow. Okay, for the morning session. So we're doing something different because those are the only exchanges that are open tomorrow. Okay, apparently the energies and the metals don't really care about Carter. Just the indexes. It's kind of funny because the indexes are manufactured. They don't have an underlying thing like the energies and the metals do. Which is probably why it is the way that it is. When I say manufactured, they're just a financial instrument that was created as a way to speculate. Whereas the gold and the crude oil are real things. And they really have underlying commodities. I think the grain markets, I don't know if those are open tomorrow. They might be closed too. I'm not sure. But that would be like your soybeans and wheat, things like that. Tomorrow, the energies and the metals are open tomorrow. Yeah, I'll show you what was sent to me. Here. So Forex is open, crypto is open, energies are open, metals are open. And CME and CBOT ags, that's your softs and all that, your grains. They're open, well, they close early. Yeah, soybeans, corn. They close early tomorrow. But these are the two have normal hours. We're going to trade those tomorrow. Okay. That's my plan. And it'd be interesting to see how silver trades. This is a sell here on the ES again. Right here at the open of this bar, 49.75 was a spot to sell that. Okay, 49.75. If you didn't get into it, it's too late to get into it because it's already gone 4 ticks into profit. Okay. That was the question, was what markets are open tomorrow. That's why I showed you that. On the DOM right now, 47.50 is what it looks like the markets want to go down to, 47.50, which is right here. Okay, right there. Now that one had run enough into profit to get the stop to break even before I got into it, so I didn't get into that one. But the DOM was just reading 47.50 was what it should go down to. Okay. Oops. Didn't mean to bring that up. Sorry. All right. So right now, we're just waiting. It's 1:25, so we've got about 5 minutes left in here, guys. 5 minutes. Yeah, I know. Well, Michael, they said all you have to do is sign up with a different email. Now that did not work with me. But if you sign up with a different email and it gives you something that says you can't do it because you already took the trial, make a screenshot of that and send it to me or send it to Bert, because I'll send it to Bert if you send it to me. I'm going to do that too in the break here. Well, when I'm done in here, I'll do the same thing because that's what I'm getting with the CQG. You don't have a different email? Okay. We can make one up. I mean, you have more than one email, don't you? I thought I had more than one email for you. Good. Yeah, they're free on Google. You can go create one. All right, so right now we are waiting for opportunity. Right, we have about 3 minutes left, and we might get another trade here. We might not. I don't know. You know what I haven't looked at is anything other than what we're doing in here. I haven't looked at Bitcoin in a while. Wow, Bitcoin's way down there. Okay, but it's 90 seems to be kind of what's holding on to, right? Yeah. Yeah, Bitcoin's way down there. What was the next one out? Silver. And silver, this is silver on a 9 range. Okay, so silver on a 9 range even had some good opportunities today. You would have sold the open of that. You would have sold the open of that. You would have bought the open of that. You would have sold the open of that. You would have bought the open of that. That right there. That's the first one that would have stopped up. Would have sold the open of that. So silver had some good opportunities in there today too. What's the next one out? Oh, the YM was just regular TV trades. Short, long, long. Short, one stop out. This is today. It's all the way back to December. What the heck time frame is this? 19 range? Okay. I don't know if that one stop out would have even been today. Oh, this is a Z contract. All right, that's why. So nothing there on that one. That's a Z contract. What the heck, man? If you go out to 8 XRP, what's that been looking like? Oops, sorry. XRP. So it dropped all the way down to 220. Is this a daily? It's a 1 hour. Let's go to a daily on this. Okay, so it dropped all the way down to 218 after having a high here in December, 3rd of December of 289. Right, it's kind of maintaining, just like Bitcoin, I guess. Everything need to be on hold, waiting for Trump to actually the inauguration and all that. There's a long hair on the NQ. And there was a long hair on gold a minute ago, right in there. All right. You tried a different one. It said it was sending credentials to that made-up email. Okay. Well, good. I hope that works out for you. Now, yeah, it should be automatic. It didn't do it for me when I did it, but I think that's because I took an actual CQG trial before I did the StoneX version of CQG. So I don't know. I'll try. I have other email addresses I can use. I can figure something out. Try it again. Maybe go somewhere and try it with one of my other emails. That might do the job. All right. So it's 1:30, guys. I cannot let myself run over today. All right. So we were able to take some good profitable trades in here, and you were able to see how everything worked. And if you have not taken a free trial with us, well, I don't know why, but if you want to, go here to mytradingiq.com, click on the purple right here. There is no credit card required for the trial. Click on that purple, and Hal, I don't know if you're in here right now, but I'll send it to you again. Okay. Click on the purple right there, and that's going to bring you to the registration page right here. Just fill this out. It takes like 30 seconds. Fill it out. Make sure you go see TradingView login ID so you can get the indicators indicating on your charts. All right, that's all you have to do to take the free trial in there. And we finished with $27.50 per contract on the morning session. It was a good day. It was a great day today. All right. With that, I will pass it back out to fabulous Phoenix, Arizona, and Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. And the Russell's got a long here. Okay, the NQ's got a short, the Russell's got a long. Yeah, that you can't get to. Yes. Yeah, well, you can go create a different email. That's, Okay. So what he's saying is, the point he was trying to make is that it sent it. It says it sent it somewhere. That's the point he was trying to make. That he was able to do it. It said it sent it somewhere, and he was able to get it to say it went somewhere. Okay, because for me, it doesn't do that. Yeah. All right. Well, with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
Today, it took 7 minutes and 2 trades to get to $3,400.
Good job.
Thank you.
All right, guys, we left off with the Dow. Remember, the vertical lines separate today, Wednesday, from Tuesday, from Monday. When price goes up to a zone, we're looking for resistance till proven otherwise. When it drops to a zone, support until proven otherwise. From support to resistance to support to resistance. Now, here we spiked because we had yesterday afternoon this candle that closed way down here. And then right behind the line is the closing candle. It's so small you can't even see it. But the opening candle was this one right here. Okay. Now remember, the targets were published 5 minutes before the Globex session started last night, 5:55 p.m. Eastern. Now, price opened with support below, resistance above, but once red and falling turned to blue and climbing, that was certainly plenty of room to get your goal for the day. Now on a 30-minute chart, that's a counter trend trade, so you would have probably wanted to take that on a smaller time frame. But this candle here opened at 788 and ran up to 894. It's over 100 points. It only takes 20 points to get your goal for the day on the Dow. So we consolidated along the BBC, and then it looked like the market wanted to take a drop, but buyers said no, and that sent us up to the zone where we found resistance. It's what we expect until proven otherwise. And you're not even thinking about the long target until price overcomes this zone. Then you have a chance to trade up to that bearish cross from yesterday. So down we come through the zone right to the target, and we bounced and came back to the target, and we bounced all the way up to the BBC, and then we traded through the target, came back to the BBC, put in a low here, and another pullback to the BBC. But you can see the pullback held, the pullback held, and we gotta wait for this candle to complete before we can say whether it held or not, because that wick is not touching. Now, if price in fact does move up, the high of this previous candle, that's potential resistance, and that's potential resistance, right where you had a bearish cross. So when price spiked the BBC here, it ran into, when the red line gets below the green line, that's a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance the first time up. Same is true of a bullish cross, just in the opposite direction. So we had a leg and a retracement, a leg and a retracement, a leg and a retracement, and we're gonna probably run into resistance here. And this is all centered around this weekly trading zone. Now this low here, if you do the work and scroll right, left, left, you'll find why the market found support there. Which you gotta do the work. On the Russell, this is where we open, trapped between support, blue and climbing, and resistance at the BBC. Once price hit the BBC, we consolidated for hours. Then we finally made a drop. We traded down through the zone, traded through the target, and this zone is 2234/35, and the low right here is 35.6. So we bounced up. Now notice how this short target, once price traded through it and pulled back, that short target became resistance. Would send us down to the zone, support, would send us back to the BBC, resistance, would send us down to blue and climbing, support, which has now sent us back to the BBC and this short target, both of which could be considered potential resistance. But you've still got 21 minutes left in the life of the current candle. We're 9 minutes into the life of the candle and you can barely even see it. So, pretty quiet. NQ. Yesterday, I posted this in the discussion group last night. On yesterday's broadcast, we drew a window of opportunity. Now, this is Wednesday today, this is Tuesday, this is Monday, the vertical lines separated, and way back here is Friday. So we were looking for a window of opportunity, and we had to look all the way back to Friday to find it. And at 3:30 yesterday afternoon, the 3:30 candle, we closed. We traded through the window. Now that window right there is 30 points roughly at $20 a point. That's $600 per contract traded. Then price opened here last night, again trapped just like all the other indices. Support below, resistance overhead. We get up to the zone, we consolidate, and as we consolidate, you can see the BBC drops. And the zone is 21,420/21. So we traded a little bit above it. But then right here, at 6:30 this morning, we made the drop right to the target, to the tick. Now that support bounced us back up, but we're still below the BBC, and we have red and falling, so we're looking for lower prices. And down we go right to the zone that was published Monday morning at 6:15 a.m. Eastern. Support bounces us up to resistance. Resistance sends us down to support, back to resistance, back to support, back to resistance. Over and over, again and again. Never-ending cycle, no matter what market you're trading. If price manages to get above this weekly zone, you got to watch this area right here for potential resistance. It's at 21,448. If you make it through there, then you've got potential resistance here at 473, and then again here at 507. Okay. If price trades, so we're starting to print a red candle. If this pullback holds and we start to head down, right here, this looks very much like the daily chart on the ES looked yesterday, where you had both red and falling and the step line below price. So that's potentially support times 2. But as I showed you earlier on the daily chart, we traded through it. And we said it would be logical that if price can trade through it, that we would find support at the 24% fib retracement, and that's exactly where we closed yesterday. Today we've gone down to the 0 line on the fib extensions, and we've now bounced back up to the 24% fib retracement. So yesterday the 24% fib retracement was support. Today, resistance. You got resistance times 3 here. If you got red and falling, you got the step line. But after being way down here, the market has recovered rather nicely. So on the NQ, again, if price drops through this potential support, through the target, through the zone, then you got a window of opportunity down here. Plenty of room to get your goal for the day. 235 down to 195. That's 40 points. At $20 a point, that would be $800 per contract traded. On crude, we had a gap higher open last night. Now, here, let's do this and do this. Just want to make sure it was a legitimate gap. See how the market finds support at the zone? Now, we traded through this zone, but on the pullback, held, and it held. So we had a gap higher open last night. We gapped up to the zone, consolidated along the weekly trading zone for hours, and then we got a leg and a retracement. Support times 2, the zone and the BBC. Pullback held, and it sent us up to the zone overhead, which is 75.20/25, and we traded 3 ticks above the zone. And then things changed quite drastically. We had this move down, leg, retracement, pullback held, and then coming down, you got that perfect stack. Price, step line, red and falling. And price has found support at the zone 73.15/73.20. Now, notice the step line, the black line. It's starting to hook right. On this big move to the downside, they were running parallel. But now that the market has found support and is consolidating sideways, the step line is crossing red and falling. When the step line crosses red and falling, you should anticipate price attempting a retracement back to the BBC. When the step line crosses blue and climbing, you should expect a retracement back to the BBC. Does it happen 100% of the time? No. Does it happen more often than not? Yes, very much so. Okay, we opened right between these two zones. It's just kind of a mess here. We traded down and we came. The zone was at 26.58. We got down, we missed touching the target by 4 ticks. But this candle here opened at 61.1 and dropped to 58.4. So there was more than enough downside movement to get your goal from the day in that one candle right there. But price travels in legs. Leg, retracement, leg, retracement, leg. And then this move took us almost all the way to the long target, which was at 69. We got it to 68.5. This candle opened at 66.1 and ran to 68.5. That was $240 per contract traded in that candle. Pull back to the BBC held, set us back to the target. From resistance, we go to support, back to resistance, back to support, back to resistance. This time, we traded through the BBC, but we traded through it, but the retracement held, and it sent price back down, and then we caught a rally. It took us all the way up through the long target. Now we sliced through that zone, and when it ran out of steam, it retraced right back to the zone it sliced through, and then it continued in the direction of the slice. So we got a little double top up here at 26.87, 26.86.8. So this high is 2 ticks lower than that high. That began to move down. So far the pullback is held because all 3 candles are touching the BBC. But you got red and falling overhead. So I suspect that price is going to, I think this pullback, remember the pullback holds more often than not. Here, 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 here. But eventually it doesn't hold. It trades through. And I think that's what we're going to see here. I think we're going to trade through. Now on this big red candle, this was a huge candle. Why did it stop right there? When you have a bullish cross, it leads to an extended move. The first time price revisits that area will almost always be good support. And it was. It's pretty reliable. That support bounced us up to the BBC, and that pullback held. So now we're down to the zone. It's 2670/71, right below the target, which we already hit. Actually, this is the long target. So again, when you trade through the long target, very often when price retraces, it will find support at the long target. So it seems like a reasonable window right there. We'll call it 2663 down to 61. 63 to 61. That's $200 per contract traded. Okay. But you got potential support here at the zone. And in the top of the long target. In this previous low here, which happened because of this. So you want to let price take out that low, take out that low, and then you should have clear sailing right here, and that little area is enough to get your goal for the day, or 2 days. Silver. Here's where we opened, got support below, resistance above. So we just waddled sideways. We dropped, but we didn't quite make it to the target on this move. But this one candle opened at 30.65 and dropped to 30.60. That's 5 pennies in that candle. That's $250 per contract traded. With silver, you only need 2 pennies of price movement to get your goal for the day. So we had a leg and a retracement and a leg and a retracement and a leg. We hit the long target. And then we come back down, and this time we trade through the BVC. And then we get a retracement, and we're back at the target again. We spiked it real good right there. In fact, there was a bullish cross right here. I would have expected support right there, but apparently there was such a lack of buying interest that we spiked it down to this area right here. See the horizontal line? Okay. Looking left shows you a whole lot. Now over the last 3 days, this has been, today we had our highest high. We had a high at 3104. Yesterday's high was 3102. Monday's high was 3096. So each one of these new highs, it's not by much, and then it folded pretty quick. Now price trades through the zone. Remember, you only need 2 pennies. 30.51 down to 30.47. That's 4 pennies. So you could be more conservative on that. 30.48, 30.50. Goal for the day. One last look at the daily chart. That 24% fib retracement, I'm sorry, the zero line on the fib extensions has held as good support. Remember yesterday this area here was potential support. Today it's resistance. Now, it's an uphill battle for price to overcome the 24% fib, red and falling, and the step line. It has tried it once during the session. See the little wick sticking up there? But we are currently below that 24. In fact, we're right about yesterday's low. So I suspect we could see a close today. Down here at the zero line on the fib extensions. So there you have it. To become a member, a passport holder, send an email to support@cfrn.net. In the subject line, put, "I want to become a member." In the body of the email, just put your name, your phone number. We're not going to call you, but we will send you an email that explains everything it means to be a passport holder, to be a member, all the stuff you get. And then there's a link that you can click to actually become a passport holder. You get 2 hours of live training every trading day. It's an interactive environment. You're trading along in your demo account, asking every question that pops into your head. Because that's how you learn. You can sit and watch Michael in the live training room for years. Okay? But you got to start pushing buttons, as Bert calls it. Putting on and taking off trades. You start out in your demo account. When you become a passport holder, you'll get the 2420 blueprint, which instructs you to put together 10 consecutive days in a row in your demo account, where you reach your goal in 10 trades or less before you start trading real money. You see, that's you proving to yourself that you understand the strategy, you understand the indicators, and you know how to get your goal for the day. At that point, the blueprint gives you the green light to go live with one contract. Once you're trading real money, your goal now is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first and the second contract is the first contract is funded with your startup capital, money you use to open your account. But the second contract is funded with profit you earned in the market. The blueprint will tell you when it's time to add contract number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow the blueprint, it will make it very difficult to blow up another account. In fact, you'll have to break some rules. Okay? But it's all there. Been there since 2008. Time tested. So you get 2 hours of live training every trading day. Private one-on-one mentoring. There's no extra charge for that. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's why it's so important that you learn how to read the charts so that you know where to expect support, where to anticipate resistance. And our humble set of indicators, of course, makes that job a little simpler. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. On Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. And you'll be able to attend the members-only workshop Thursday nights at 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. You also get the golden key that opens up private channels in Telegram. That's really the heartbeat of the community. It's where even during your trial you're able to chat with our traders, folks just like you who tried for, in some cases, many years to become profitable. And, well, it didn't happen because you didn't have anyone to teach you how to trade. That's really the big difference. You can buy all the books in the world, watch all the YouTube videos in the world, and you may stumble and fumble your way into some kind of consistently profitable methodology. Or you can shave years off the learning curve and save yourself thousands and thousands of dollars and have someone teach you. Just send the email right here, support@cfrn.net. Yesterday we started a two-part good word for the day. Blind chance versus God's command. Yesterday was part 1, today's part 2. Hebrews 11:3. By faith we understand that the universe was formed at God's command, so that what is seen was not made out of what was visible. Speaking of our amazing bodies, what about DNA? Each human cell, up to 100 trillion, contains a database larger than the Encyclopedia Britannica. Could all of that originated by chance? English physicist Paul Davies makes this comparison. It's rather like exploding a stick of dynamite under a pile of bricks and expecting it to build a house. You may liberate enough energy to raise the bricks, but without coupling the energy to the bricks in a controlled way, there's little hope of producing anything other than a chaotic mess. Clearly, it requires more than a pile of bricks to build a house. The intelligence of the architect and the skill of the builder are key components. And it's the same with all the complexities of a human being. The odds are zero that all required elements necessary to initiate human life just happened to assemble themselves in the same spot on Earth at the same time. And even if we did accept that notion, blind chance couldn't put those 100 trillion cells together in the order required to produce life. Prominent scientist Francis Crick wasn't noted for his faith, but even he said the origin of life seems almost to be a miracle. So many are the conditions which would have to have been satisfied to get it going. And what's the miracle? Well, the psalmist said it very well in Psalm 139:13. You knit me together in my mother's womb. I praise you because I am fearfully and wonderfully made. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.